My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. To stimulate or not to stimulate? That is the question. Every time we hear about that a bailout deal might be on the table, the market rallies, including today. Dow advanced 161 points. The S&P climbed 0.88%, and the Nasdaq soared 1.39%. Every time the negotiations blow up, the market gets slammed. That's why I keep telling you that you got to stick with stocks that don't need stimulus. All day they showed them on air. It was fantastic because there are too many moving parts here to be able to be, let's say, negotiated. But the White House is negotiating with Speaker Pelosi, though. But also they agree to also have to pass the Senate. And right now, although Mitch McConnell said that maybe they're interested in some sort of stimulus, they're really laser focused on the Supreme Court. Now, you throw in the election next month, and you've got a chaotic situation that probably doesn't end well. There's too much partisan rancor, too much name-calling. I'd love to be proven wrong. Main Street absolutely needs the money. The stock market doesn't know what Main Street's doing. Secretary Mnuchin, Speaker Pelosi, they know that. Both of them know that. And today, the president seemed to know it, too. But until they get Mitch McConnell, the Senate Majority Leader, on board, and until they stop calling names, call me skeptical. Which brings me to my game plan for next week. While the tease of a deal is enough to keep the bullish balls in the air today, I don't think, if we don't get something come Monday, well, I do expect a sell-off. It doesn't help that this market's gotten very overbought. The most overbought it's been this year using my the S&P oscillator that I pay for. It's come up too far too fast, and we are due for a pullback historically. So if something doesn't develop here, well, then I can see us going down. Also, Monday, we might find out what's really going on between AMD and Xilinx. I like Xilinx. They've got great chips for the data center, autos, defense, telco, all areas that AMD needs more exposure to if they want to take things to the next level. But I didn't think Xilinx was for sale. Remember, we had them on not that long ago. And I worry the price will already be too high for AMD. But Dr. Lisa Su knows what she's doing. And if Xilinx wants to play hardball, I think she'll walk away. It's an interesting catch-22. AMD could really benefit from this takeover, which would give them a much larger TAM, total addressable market. But it only makes sense if they can get Xilinx for the right price, and it may be out of reach. Either way, I've got total faith in Lisa Su's leadership. Remember, after discussing with her where the stock was at $5, I came to you and said, buy it. She knows what she's doing, not only with the stock price of the stock, and she's an engineer. She knows what to do with the greatest chips. If she decides to acquire Xilinx, and AMD sells off, I am going to come here and I'm going to do what we call pound the table that you need to buy the stock of AMD. How about Tuesday? All right. Tuesday could be
the House of Pain.
Why? Because the banks report. We've got J.P. Morgan and we've got Citi, and holy cow, I don't see how either bank's going to put up numbers that make the street happy. Citi has to talk about how much money it needs to put into risk management. That's never good. J.P. Morgan is a great lender to small businesses, but that's not good either. I do fear the worst, but I hope for the best. Remember, the banks are pitiful, helpless giants right here because their rates are so low they can't make any money in your deposits. Plus, they face this incredible amount of scrutiny from the government, from the Federal Reserve, on their dividends, on their buybacks. Fortunately, we also hear from Johnson & Johnson, though. They've got a fantastic pipeline, so strong that their potential COVID vaccine may not even be the focus, thank heavens, because they're not going to make any money off of it. I always regard J&J's conference call as a well-oiled machine, but I wish the stock hadn't jumped above 150 ahead of the quarter. That means the bar has been raised. I prefer lower expectations. Hey, remember when Tao brought it down to 130? It's at 150. Wednesday, we get more banks. Bank of America put up such good numbers last time that it's become Warren Buffett's favorite, even if it's not the market's favorite. The same can no longer be said about Wells Fargo, though, which reports the same day. The press-shy CEO, Charlie Scharf, should think twice about staying silent because there are a lot of questions that need to be answered. Questions about the turnaround he's trying to orchestrate. If there even is a turnaround, he's an articulate man. He should know to come on and talk. We also hear from Goldman Sachs, and they could actually have a good number because there's been tremendous volatility. That's great for the bank I used to work at. There's tons of equity issuance, and there's a lot of M&A activity. Those are what's needed for a good quarter. It may not be a great time for the regular banks, but it's a good time for investment banks. Goldman stock is fundamentally solid, although that hasn't meant much in this bedraggled group. The business is good. The stock is cheap, but every time I've recommended it to you, let's just say it hasn't worked. Two different United support too. We got United Health Group. They may be your health insurer. And we got United Airlines. They may be your airline. They're polar opposites. If we don't get a stimulus package that includes the airlines, or at least a more limited industry-specific bailout, then you're going to hear bad things when United talks. It'll be a very bad call. But United Health, that's a different story. Regardless of what happens in Washington, I expect a big upside surprise here. I expect a good conference call. You want an exciting analyst meeting? Watch out for Zoom video on Wednesday. This is the Zoom economy. It's the Zoomy economy. It's everything. And anything that shows an extension of the reach beyond what we're getting right now from the pandemic, for instance, that deal they signed with DocuSign they just talked about, well, that will justify an even higher price. Go back to the 500. Zoom's synonymous with the pandemic. I think there's more to it than that, though. And I think you're going to find out when CEO Eric Yuan shows the world what he's cooking up on Wednesday. Thursday, tough Dow stock. Walgreens reports. My hope here is that the company's lowered expectations to the point where they can finally be beaten. I mean, Walgreens is really a great conundrum. They've got nice stores, a big pharmacy, yet Amazon keeps knocking the stuff out of them. I await a defense. If you want to know the most chronically undervalued bank or broker, look no further than the stock of Morgan Stanley, which is now aggregating assets thanks to the $7 billion acquisition of Eaton Vance announced this week. Morgan Stanley's almost out of the risk business entirely. They moved into the sticky asset management business, $1 trillion. Much better in this environment. I can't for the life of me figure out why the stock trades at only 48 bucks and change. I think Morgan Stanley's biggest problem is that it's stuck with all the other financials and these cockamamie ETFs that take down the entire group as if it's just some sort of bank with a lot of risk. If we didn't already own Goldman Sachs for the charitable trust, which you can follow along at actionalertsplus.com, had some nice ones lately, but you have some ones that aren't nice too. I want a piece of Morgan Stanley here. Frankly, this company's rapidly becoming less of a broker, more of a financial advisory firm, and I like that a lot. CEO James Gorman, I don't know if you caught him yesterday. He's done a phenomenal job. Good interview with Wilf. Finally, Friday, if the price of oil keeps running, well, then maybe Schlumberger, also known as Schlumberger incorrectly, it could bounce. But what a mess. Oil service companies make consistent money with crude at these levels. There was a rumor floated today by a very good analyst that maybe Chevron and Exxon are going to merge. I don't put the likelihood it's great, but it was out there. I'm also looking at VF Corp. They report because apparel's starting to come back. But what do I like? I like American Eagle. I like Lululemon, Gap, and don't forget Levi's. They're all good to go. L Brands, too. The bottom line. Look, we've had a very big run this week, so I'm concerned there's a little too much complacency about anything coming from Washington and not enough support or interest in the higher quality stocks that don't need any stimulus, like the ones that were featured all day today. Those are where you want to go if next week turns out to be the house of pain. That would certainly be what you're going to get when you hear from them. Let's go to Nir in Pennsylvania. Nir.
Hey, Jim, how are you?
I am good, Nir. How about you?
I'm good. I have a quick question for you. I want your opinion.
Yes.
This company, Growth Generation, in the home improvement / cannabis. I like this stock. I like this company. I invested it 6 months ago, and it seems to me with Biden, the Democrat, if they're going to win this presidency, I feel like this company can grow. What's your opinion on it?
All right. Well, you're absolutely right. I mean, when I watch the debate, it's very clear that a Biden election is going to maybe get rid of the class. Right now, it's a felony to have pot, federal felony, even though states are for it. Growth generation goes up substantially if Biden wins. Now, there are other people who say, including Hindenburg, that there are problems with the management here. I refer you can go back and read and watch the interview and the article and the piece I did about it, and you'll understand that I agree with you, Nir, that I think it's an interesting situation. Let's go to Mike in California. Mike.
Hey, Jim. Thanks for taking my call.
Of course.
Yeah, I need a financial, and I've been looking at PayPal, but I'm nervous about it. It's already had this incredible run this year, and I'm just worried it's too expensive right now.
Well, it is very, very expensive. And if we do get the pullback that a lot of smart people are looking at, you might be down 30, 40 on PayPal in a heartbeat. But here's what I say about PayPal. It is a great long-term story, and I think it can go higher. There's a lot of stuff that's going up now that shouldn't be going up. This is a very good company. This and Square were two that, I've been behind for a very long time. Let's go to Hans in Maryland, or Hans in Maryland.
A big booyah baby to you, Mr. Cramer. First time, long time.
Tell the truth. What's up?
Well, with the second wave likely possibly happening and the recent dip in this company off of its high, I have a position in Clorox. I'd love to hear your thoughts on whether I should double down, just
all right,
hold,
okay, so look, I don't play with a forked tongue. We owned it for action alerts. We had such a huge gain. We took it a little bit higher from here. I don't mind it, but I don't think that this is the level that I really want you to buy it at. There are others that I think are better right now. And don't forget, everyone's talking about a vaccine. No one's talking about this stuff anymore. And the clean surfaces, it's still very important, though. Okay, look, there are too many moving parts here for me. And it all starts with this. That's why I keep urging you, stop betting on stimulus. Not with all this mean name calling. It does matter. I want you to stick with stocks that don't need the stimulus. On Mad Money tonight, Okta. Kramer family fave Okta is up over 100% year to date. How many times can I tell you Okta is the key to this market? Can the move continue despite market uncertainty? Well, why don't we sit down with the CEO to find out? Then green hydrogen, how much you love green hydrogen, could become a $12 trillion market. I'll tell you how to play it. And it's a new test for the coronavirus that promises to deliver a diagnosis in 23 minutes, highly accurate and in the palm of your hand. I'm going to talk to the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.